there folks, welcome in, a Palantir related video here. So last week on this channel I reacted to a video in which a YouTuber is basically selling out of their entire Palantir position, or they sold out of their Palantir position. I reacted to that and I kind of gave my opinion on it. And now we're going to react to a video from Amit, which is a pretty big Palantir YouTube channel out there, and I'm going to see what he has to say, why he's not selling Palantir, and I'm going to share my perspective on this as somebody that is a Palantir shareholder now. I bought some Palantir shares. This might have been a month or two ago now, and I'm up to 1,100 shares. I'll be honest, I've made my decision with Palantir. I believe I'm going to likely build this out into a minimum of 5,000 shares in regards to Palantir in the public count, but I could definitely see myself owning anywhere from 10,000 to 20,000 shares of Palantir. I'm pretty confident and kind of investing in this one, especially anything under a $20 billion market cap, which is where that stock is trading at right now. It's less than $20 billion. Anything under that, I really like the valuation there. We're talking about a company that has over $2 billion of cash and investments on the balance sheet, a business that I think is going to build into an absolute cash flow beast. And Alex Karp, the CEO of the company, is pretty confident they're going to $4.5 billion or more in revenue by 2025, which is pretty darn attractive if you're paying less than $20 billion for that company now in the industry they're in. So yeah, I really like kind of the valuation, kind of everything that's lining up here with Palantir. But yeah, we're going to go ahead and react to this. By the way, if you are somebody that cares about Palantir stock and you're looking to join my private stock group, we actually have an entire Palantir chat where we talk about Palantir stock in there all the time. There's a lot of Palantir shareholders that are in the private stock group. So if you want to join us in there, check out the pinned comment to apply to join us in the private stock group and get access to the Discord chat and everything like that. Okay. Alrighty guys, let's go ahead and jump into this.
Wait, am I selling Palantir? The answer is obviously no. The title of this is why I'm not selling Palantir. And I wanted to take this moment to get my raw thoughts out there in video format for those who are watching, but also I have an audio startup. So if you want to listen to this content, or if you're listening to this content already on Audio, which is the name of my startup, you can listen to this content. Link is in the description if you want to check out the audio version of this. I'm going to be giving my raw thoughts on what I feel has happened to Palantir over the past basically 2 weeks and my logic and my thought process for why I'm not selling Palantir, why I'm continuing to probably DCA into it over time. I'm not DCAing yet, and my overall thoughts. So first, a couple things. I know I did a podcast with Chris and the Palantir Weekly crew back on Friday, and Chris kind of shocked everybody because he was like a long OG, bull for Palantir, DCAing constantly. He had around 13,000 shares, by the way, so he did have a very sizable position, and he sold out of his entire position, and he is now transitioning into other stocks. Now, the Chris gentleman he mentions there is not the YouTuber that I reacted to. I reacted to another YouTuber called Sasha. So just not to confuse that. So there's obviously been several people that have sold out of Palantir stock here very recently, which, I gave the analogy in the last video of feeling like I'm the guy that's like going to this party and everybody's getting out of this party and they're like, don't go in there, man. This party's crap. So, yeah, anyways. Chris gave was a logic that I think it's hard to refute at the end of the day. The logic was very simple.
Tired of cold calling?
Oh, shoot. Oh, man.
Introducing Lucia, the easy...
I'll be honest, I don't think that's ever happened when I've done a reaction before. What the heck? That caught me off guard. I never even thought about this before.
I feel like management is performing at their highest of levels when it comes to sales and marketing. I can agree with him on that. He feels that Palantir's product is phenomenal, but it is going to be commoditized by companies like Microsoft and Databricks and Snowflake that have distribution and that actually know how to sell a product, which means you could have the best product in the world, but if you can't sell it, then it's not really something that's worth investing in.
Yeah, according to Karp, he says that if a company tries to copy basically what Palantir is doing there, it would take them years and years to even accomplish something like that. He feels like the company's very out in front of everybody here by at least a few years, and as long as a company obviously keeps the pedal to the metal, they should keep either accelerating or at least keeping that, let's just call it, kind of head start there. So just kind of perspective there, but you never know, companies could potentially copy it. But I think that's always like the thing that's said out there is like, the competition's coming, acquisitions come and they're going to copy this company, that company. Sometimes it happens and others do copy and they mimic whatever the other company's doing and they do it successfully, but many times it's not the case. It's harder to copy than it looks, let's just put it that way. And we've seen that throughout time with a lot of these biggest of the big companies. There was a time when Google wanted to compete with Facebook, believe it or not, and try to create a social platform. I don't know if you guys remember that. I think it was called maybe Google Plus or something like that. I can't remember. But anyways, Amazon launched the Amazon Fire phone. They thought they'd be able to, catch up to Apple. We know how that turned out. It's much, let's just call it easier said than done.
He just believes that his capital is continuing to get sucked up by a company that could have a better return somewhere else, just from an opportunity cost perspective. And he doesn't want to continue to give Alex Karp his money because he believes the government business and the commercial business is sucking up his capital, and they should kind of have it separated so that they have one thing that's actually growing, so his capital is growing with it. He has a bit of a thesis that I think a lot of people can resonate with when it comes to selling Palantir. Now,
by the way, I don't agree with splitting the businesses. The commercial business is the one that's growing like insane right now. Like I think it was 120% revenue growth just in the United States in this latest quarter. So I don't really agree with splitting the government business and the commercial business. In my personal opinion, I like it just kind of being one thing. And there's going to be certain times when the commercial business is really pulling through numbers. There's going to be certain times when the government numbers are pulling through for the company, right? And in the latest quarter, it was really more so the government kind of hurting them here in the short term.
People have asked me why am I not selling Palantir and ultimately why I continue to hold. I think there's a couple of core arguments that are pretty simple for why I'm not selling Palantir, and then we can get into some more stuff about it. So number one is I just don't think that this price is worth selling at. Given even if I agree with all of the bear case theses for what's going on, I still feel Palantir is like just massively undervalued from where it is right now. The reason for this is because if you look at Snowflake is trading 3 times its trailing 12-month revenue. Palantir's trading 1 times.
Nope.
It's trading 12.
No, not even close. Not even close. Palantir today is probably trading at 8 or 9, something like that. Trailing 12 month. If you want to back out the cash and investments, take that off of the market cap, it might be like 7, 8. I don't want to comment on Snowflake because I don't know exactly where they're valued, but just to be clear, that's not accurate. I mean, if Palantir was trading at 1 trailing 12-month price of sales, I'd buy $500,000 Monday.
Revenue. So when you look at when you're paying for Snowflake, you're paying 3 times more for their trailing 12-month revenue if you're buying 1 share of Snowflake, whereas for Palantir you're paying 1 times that. That to me screams undervalued, given I also believe in the technology of Palantir being better than what it is for Snowflake. So, and this is similar to a lot of the other cloud-based platforms that exist. You're paying a lot more for their TTM, their trailing 12 months revenue, versus what you would be paying for something like a Palantir. Now, the reason for this is because Palantir has gotten beaten up massively, right? This was a $45 stock that went down to $6 at one point and now is hovering at $9, $10. So even if I thought like, okay, I want to sell, I want to get out of the position, I don't want to be a Palantir shareholder anymore, which is not the case for me because there's a lot of other reasons why.
Let me pull up exactly where Palantir's market cap's at right now. All right, so right now, Palantir is trading for less than $18 billion. But it's a little confusing because, maybe Yahoo Finance hasn't updated if they have more shares outstanding now, so maybe it's a little over that. But at the same time, if you back out the $2 billion in cash in investments versus no debts, you're really paying like 15, 16 billion, somewhere in there for the actual company, right? And let's say $2 billion run rate, trailing 12 months, something around there roughly, then you're basically paying like a 7, 8 trailing 12-month price of sales. So, for a company that's growing like this in this industry, not expensive. For many other companies in many other industries, it might be extremely expensive, right? There's some industries that you need to basically trade at kind of like less than a 1. Palantir, these sorts of companies in this sort of industry, the price to sales ratios are pretty much you have to expect to pay the highest of the high. And the reason being is because when these businesses build out, they're usually so much more profitable than really, anybody even ever could have forecasted essentially. And you see that pretty consistently.
To hold it. The obvious reason is just from a financial perspective, I don't see my capital being put somewhere else where the opportunity cost, given how beat up it is, makes a lot of sense. And like, that's the first thing to me. Like, what other stock am I going to choose to? Because again, this is a stock picking game. This is not an index picking game. So if I choose to pick another stock, then that stock has to perform better than what Palantir could produce at. And if Palantir, even gets if Palantir gets the federated data platform from the NHS, if Palantir is able to get the Army Titan program, there's a lot of different catalysts that I believe are coming up that could allow Wall Street to look at Palantir a little bit more favorably, even if their earnings weren't that amazing. I think Palantir could potentially just double, right? Go up 100% over the next 12 months, a lot more easier than some other companies. So the question then becomes, where do I see that doubling happen? And if I don't see it happening in a lot of other sectors or a lot of other stocks, then I'm like, okay, I'm going to go with Palantir. Palantir is going to be the stock that I'm going to choose to pick. So that's the first thing. I think it's just undervalued from like a pure numbers perspective. Is I invested in them for a reason, right? This is not saying I'm an emotional investor. This is rather saying if I have invested because of CARP, I invested because of management, I invested because I believe in their product, then ultimately you have to give them time to let that investment happen. I'm not one of those people that's going to be like, oh, I don't see a return, I'm taking out my money and I'm going to go put it somewhere else. And if you are doing that, that's fine. To me, my peace of mind is like, okay, I'm not a day trader, right? Like I do something, I have a startup on the side. I'm kind of all in on that startup. So for me to manage like taking out my money and putting it somewhere else and seeing it grow, then taking out the money, putting it back in Palantir, like that's just not reasonable to me. That's kind of why I fit the definition of a long-term investor. It's almost like if you buy Google stock right now at like 120 or whatever, and you just hold it till 2030, it's probably going to go up, right? So it's the same thing for me for Palantir. I'm like, okay, I think it's probably going to go up. And I don't believe they've hit their inflection curve yet. Which I'll get into a little bit later. But
yeah, and when it comes to Palantir, this hasn't even been a public company for very long. I mean, I don't even know if there's anybody that's really a long-term investor that's been in this stock. I mean, think about this for a moment. This company went public just, probably 24 months ago, maybe a little over that, something like that, right? It's not like this company's been public for 5 years, 8 years, 10 years, something like that. So they're a relatively new public company. And when you have these companies go to market, you usually have to give them some time for things to play out here. And I've watched, time and time again, even in many of the best companies, it takes a while for them to kind of get their feet in the ground and start actually moving, essentially. Even I remember when Meta went public, Facebook, that stock went down like 50% from its IPO price within months of their IPO. And so this happens all the time where companies go public and they just have a tough run at it. And that's a risk you're taking when you're buying a somewhat new company to go to the public markets, let's call it in the first year or two. You're taking a big risk. Even if it's a company that's been around a while, like a Palantir, at the end of the day, when you go to the public markets, it's a new whole deal. It's a new whole game. And so I just think that's some food for thought there. It's dangerous. And I own several stocks that I bought that went public in the past year or two. And all those stocks are going through this called trials and tribulations right now. And it's a whole process you got to work through. And obviously you can get generally speaking, some massive discounts on these stocks because they're going through those tough times. But you got to understand, like, as a long-term investor, you got to be through the thick and the thin in this whole situation. It's not just all bright days or something like that. Otherwise you start becoming kind of more of a trader and you miss out on obviously some massive opportunities, which, is I think is kind of self-explanatory there.
The point I'm trying to make here is I believed in them for a reason. And part of that was technology, part of that was management. If I believe in those two things, and none of those two things have changed, earnings has not been amazing. Yes, the quarter was not phenomenal, even though they put up $473 million in a recession. Like, my thesis has not been broken. My thesis has not been able to change. It would take multiple quarters of a lot of bad things happening from a sales and marketing, go-to-market strategy, whatever it may be, for me to really feel, man, this is just something that's not worth it. And I just don't feel that's the case yet. Maybe that will happen in the future. I don't know. But right now, that's not the case. And that's why it's not interesting for me to consider even thinking of
respect. And I like that he still likes the management team at Palantir, because nothing has changed with the Palantir management team. Let's be very clear about that. Nothing. Alex Karp, in my opinion, has actually gotten better since this company's went public. Like, all these folks that were investing in the stock and all of a sudden like beating down Karp and, Karp did this, Karp that. And I'm like, dude, this is the same Alex Karp. He's probably a better version of himself than he's been in the past. Like, I've listened to these conference calls. I've watched him go on CNBC, and I pointed this out a long time ago in regards to Palantir, that, he could ramble about all these, different subjects when really people just want to hear about the numbers and what's going on with the business, and he'll go on to all these different talks. So, that's one of those things that kind of frustrates me looking at this. I'm like, dude, you can't get mad at Alex Karp. This is the same guy. But I listened to the latest conference call. I thought he was better on that conference call than many other ones in the past. He didn't go off subject as many times as some of the other times. Like, if you've heard this man, like, sometimes he can go on these tangents for 5-10 minutes, just talking about, the world and all these different things, and, kind of almost, philosophical type ideas. And so, anyways, that's just my opinion on that whole deal.
So that's the first thing. I believed in them for a reason. I trust them for a reason, so I continue to invest. Now, the other thing is their inflection growth curve. I don't think their inflection growth point has happened yet. I know right now they're guiding for like 23% year over year on growth. I think that's going to be an anomaly. I think overall, Karp has said by 2025, they're going to CAGR at 30% to 4.5 billion. Whether or not it's 2.5 this year or 3 next year or whatever it is, the CAGR is year over year growth, 30%. 4.5 billion. That's when he said, I'm driving the company to that form of revenue. So by 2025, if they're doing 4.5 billion in revenue, I have to assume they have figured out how to grow 30% year over year. Last year, they grew 41% year over year. So this year, we have to see what they're able to be able to grow.
Something I think is important for people to remember here is, in regards to Palantir, this is a company that everybody obviously expected to grow 30%. They're growing 20-something% revenues this year, maybe 26%, 27%. They'll grow revenues in 2022, okay? Think about this for a moment. What are other companies growing at? Amazon's going to, for sure, grow less than 20% this year. Amazon might grow revenues, 5 to 12%, somewhere in there. Apple's revenues are very close to going negative, okay, meaning the business is shrinking. Meta, which has been a growth engine beast company for a long time, has put up several quarters where they've grown only single-digit percentage revenue, okay? Look at companies like Shopify. Look what their revenue is doing year over year. Look at Netflix. These are great growth companies. So you're seeing almost all these companies go through a very, very tough time with their numbers. And here you have Palantir growing 20+%. In this environment, very impressive. Now, if Apple was growing 15, 20% revenues, and Meta was growing 20-something%, and Amazon was growing 20-something%, and Palantir comes in with a 23 or 26% growth rate, then you're disappointed. Then you're like, what's going on here? I might as well buy big tech. But the fact is, many of those companies are growing single-digit revenue, which means less than 10%. And some of those, a la Apple, is literally at jeopardy of going negative. Okay, so I just think that's kind of some food for thought here, and you got to compare it to what is going on for other public companies out there.
31%, 30%, these are startup numbers. These are not, the big tech companies grow at 10, 15, 20% year over year. For them to be able to put up startup numbers, which is what they are intending to do, then I am, taking that risk with my capital that they are going to be able to perform and be able to do that. The reason I think they're going to be able to do that is because I've analyzed their technology more than, most people on the planet. And as a result of analyzing their technology, their partnerships, their approaches, their sort of platform-like approaches to be able to build things and operating systems within different niches in different industries and have those become exponential things that can scale on their own, I feel very confident in their ability to build and their ability to grow. We are going to see if that happens. I could be wrong on this. They could absolutely crap the bed when it comes to this. I just don't think when you have such a far superior product that happens. Sales is something you can figure out. Marketing is something you can figure out. Building the technology product is not something you can figure out. And, I believed in a lot of what Karp was saying on the earnings call, which is that a lot of the companies that exist today have very thin products, and those thin products are going to be worthless in 10 years, which is why they're spending excess amounts of sales and marketing dollars to be able to get those products out there. Now, does that mean you have some growth as a company? Sure. You also have to remember how much you're paying for that growth, given how much they're paying for sales and marketing to be able to get you that growth. I want to bet on the actual fundamental asset of a company, which is the technology. And there is zero doubt in my mind that Karp believes they fundamentally have one of the most differentiated technologies in the world, and that will be able to make the company, in his words, 20 times bigger than what it is today. And that was when Palantir was at $20. And that's a company that's exciting for me to invest in. And so that also forms my thesis. Like, I don't think they've hit their inflection growth curve yet, which means that if they haven't hit that yet, then there is no reason for me to want to sell, especially if I'm not looking to actively manage another position and I just want to have more peace of mind. Like I can handle being down money. I can't handle constantly switching out of positions while I'm trying to do my day job, which is like run a startup.
Yeah, I think one of the, if we're talking about inflection growth curves and things like that, I think one of the biggest things for Palantir is they become a company that's so synonymous that if you run a big company, you have to use their product. And if you're not using their product as a Fortune 500 company, a large company, or maybe even a mid business over time, what are you doing? Like you have to, right? If they can become that sort of company, this is a company that's going to be multi-$100 billion market cap, if not larger than that. Because if you look at every single company that ever gets to that point, like AWS is a really good example of that, right? Every subject usually starts with, am I going to use AWS or am I going to go somewhere else, right? And usually it comes back to, I'm going to use AWS. If Palantir can ever get to that level for their business, right, where it's like the main product that you as an executive of a company have to think about, we're going to sign up for Palantir, or should we go with somebody that maybe somehow competes with Palantir, right? And Palantir is many times seen as a company that doesn't necessarily have a direct competitor. And it's almost seen as a company that doesn't really have a direct competitor. They might have competitors, but they're in kind of certain products, right? And maybe this company kind of competes over here with this product, but not really over here with this product, right? And so I just think that's kind of some food for thought. It's also a company that doesn't have necessarily a clear competitor. A lot of times people like to say Snowflake's a competitor to them. Maybe in some realm it is, but not all the way across the board.
Because like from a peace of mind perspective, that's not going to be relevant to me. That's just not going to help me be able to get through the day.
Have you ever wondered how websites rank at the top of Google while others do not? Did you know?
And so that's another reason why I don't want to sell Palantir. The final reason that I want to say here is I've chosen Palantir because of a personal reason as well, and that is sort of my timeline for risk tolerance and my age. Right now I'm 24 years old. I'll be 25 in a couple months. And given my age, and it doesn't matter if you're 25, 35, I just feel I can wait a bit more. Chris, for example, he has a wife, he's trying to get a house. He has a lot of different things going on where his capital is a lot more important than to be locked up in theoretical dead money for the next 2 years. Now, was this going to be dead money? I don't know. I think given how beaten up it is, it's likely not going to be dead money. But even if it is, worst case scenario, I would be 26 years old and then Palantir would start to rocket, and I have, 2 years of an opportunity cost while I'm, building something on the side, and hopefully that's successful. By
the way, usually, and people get this very confused, if you love one of these sorts of companies, right, the best thing that could ever happen to you is that stock price stays down for 2-3 years. For Tesla, the stock price stayed down for like 5-6 years. The stock price didn't do anything from basically second half of 2013 all the way through 2019, basically. Somewhere around there. It was like a 5 or 6 year span where Tesla stock did nothing, right? And as long as you believed in the company and you see it going where it was, the best thing that ever happened to you was it stayed down for so many years. Now, a Tesla is kind of a freaky example. Usually that's not how a stock price works, where it just like stays down for that huge amount of time and then goes to the moon. That was kind of an extraordinary circumstance. But the best thing usually to happen is you get 1 or 2 years where a stock price just is down and out. It's in a bad place, right? And the companies continue to make progress. They're continuing to build their revenues. They're continuing to get their margins in a better place, their profitability in a better place, better employee force, better culture, better products and services, all those things, right? And meanwhile, you're able to just buy shares for very, very cheap over an extended period of time. And it's not a situation where it was like, I bought some shares, but then the stock went up right away and I never got to buy more shares. That's not ideal situation there, guys. So I never fear. Like, if anybody's scared, like, Palantir might still be the same price this time next year, $7, $8 a share, I wouldn't fear that. That's a great, if you really love this stock and you believe in it, because that gives you a whole year to buy this flipping flapjacking stock, right? And take your income and put it into this stock. So, yeah, I just want to discuss that. I think it's something a lot of newer investors get confused about. They're scared of because if you're new to the market, you haven't been in for long enough to really understand that it's really about where the stock goes over the next 3-5 years, not where it goes over the next 3 to 6 months. It's just, so anyways.
It's just not enough reason for me to feel so obliged to get out of the position at this age with the lack of responsibilities I have. I don't have a wife and kids and all that stuff, versus just let my capital ride out and try to DCA and try to build an even more substantial position and try to obviously mitigate some of the risk by diversifying my overall portfolio, which I'm probably going to start to do a lot more. But also, it's like, this is the stock that I picked. This is the one that I want to be in. It's not that I think Palantir is Tesla. I just do feel like people who are selling right now probably would have sold Tesla in some of their worst quarters. Now, Palantir's fundamentals...
100% true about what he just said there about Tesla. Now, in regards to diversification, absolutely very important. If you got all your eggs tied up in Palantir and that's it, and you're all in, you're playing a very dangerous game. Very dangerous game. There's probably 10 stocks, if not more than 10 stocks, that I have at least 6 figures in. I make some bets on companies, right? And, a lot of times it can be growth related companies. But what I like to do is I spread my money around because I know that some will fail or some will not go to where I thought they were going to go, and it might be small gains. But if I spread my money around, among my 10 or 15 favorite stocks, it's going to be some that just absolutely smash it. And I've seen it consistently throughout my life in the stock market with stocks like Tesla, stocks like Elf, stocks like Monster, and Fizzy Get Dizzy was one that went up really, really quickly, and we made some incredible gains on that one. Revolve and some of these others that, they just do way better than you ever really anticipated. And, that's something that obviously plays out, and it'll be something that plays out when we get into the next bull cycle as well. Some of my stocks will do okay, some won't do good, and a few are going to absolutely just crush it and will end up making me 500% gains, 1,000% gains, 2,000% gains. That's what will happen.
Because it's B2B enterprise, it's not Elon Musk, I get it. But the sort of essence of not selling and continuing to let it ride and getting a little bit more data, at least for another 2-3 quarters before you just decide to just bury it, that's what matters to me. Especially if you decide to bury it right now, you better have a better position to go in this economy where we might be having a bear market rally. We're not having a bear market rally. Who knows? You've got to be able to objectively kind of make that decision. And while you're making that decision, then it informs whether it's a good thing to sell or not sell. I don't know any other stock that's better to invest in right now. I don't know any other stock that has better technology right now. I don't know any other stock that is going to potentially succeed with the bear market rally or come right back down after we have a real recession, or if we're even going to have a quote unquote real recession. There is so much uncertainty that the one thing that I know I'm certain about is my belief and my faith and my trust in the technology of Palantir and in the leadership of Palantir to get us to the next level. And they're going to put up $2 billion in revenue this year, which is, pretty insane. Last year they put up $1.5 billion. To me, I think that's a good thing. To me, I think that's a strong sense of their ability to grow. And ultimately, over time, we're going to see how it plays out. And hopefully I'm not wrong on this. Of course, I could be wrong on this. All of us could be wrong on this. But that's the whole point of investing. You take a risk and you see what happens. And for me, just given my age and where I'm at right now, I don't want to take that risk with a different company or a much more... I'm not investing in Palantir for them to be another snowflake. I'm not investing for them to just be another stock. I'm investing in them and taking a more substantial risk because I see the bigger picture. And I'm going to give them some time to execute on that bigger picture. And if we see that happen, then I'm going to stay. And if we don't, then we'll leave. But I want to give it a lot of time before I just make that decision, so quickly or so bluntly like that. So those are my thoughts. Let me know what you guys think about it.
I appreciate that. Yeah. And I would love to hear everybody's opinion in the comment section. And thank you, Admit, for doing that video here today. And just to sum up things, obviously Palantir has a massive opportunity. They continue to make progress with their business. The valuation is extremely compelling now at this point in time. Stock-based compensation is going to be less and less of an issue in 2023 and beyond. And that's really, really good too. And remember, those losses, they can write those off on taxes in the future, which will make their profitability look even better when they flip to the other side. And that's something a lot of people think about. And if you think this stock won't start going up until let's call it, they reach profitability, you are sorely mistaken. The stock will already have made a massive move because Wall Street's going to already be looking at it. First off, Palantir is already on Wall Street's radar now at this point in time, and you see some Wall Street funds buying in. But basically what's going to happen is as they get closer and closer to profitability, the stock will already start moving and moving and moving. And so I think I've got a pretty good amount of time to add this one at under $10 a share and under a $20 billion market cap. I think unless the market goes beast mode again, I think I should have at least the rest of this year to add shares, and we'll see how heavy I go with it. A lot of it's going to depend upon how low the stock price goes. If this stock goes back to the 7s and maybe even the 6s, I'm going to build out the position pretty darn aggressively. Let's just call it that, guys. So anyways, much love as always. I appreciate you joining me. Let me know your opinion in the comments section. Don't forget to subscribe. We just hit 7,000 subscribers on this channel. You're going to be flipping my flapjacks, and have a great day.